What's up, y'all? How are y'all doing? My name is Trey. This is Investing by Numbers. We talk all things stock market, looking at different companies we're looking to invest in, kind of what we're holding. I go over my portfolio and vlogs, stuff like that. So if you're interested in that kind of thing, please like and subscribe. But a lot of drama going on out there in the stock market right now. We've got, of course, Trump and Musk kind of going at it, trying to dig each other's skeletons out of the closet. We've got, of course, the tariff situation, which is kind of coming to an end. It seems like they're trying to do more negotiations, but the market is about 2% away from all-time highs, at least the S&P 500. So the thing is when we're getting to all-time highs, are there still good deals out there? Obviously, there are not as good of deals as there was, a few weeks ago, especially end of March and through April, when we hit kind of like 20% down in the S&P. But there are still some good deals out there, even though stocks are rallying. And this is just another one of those times, y'all, where this past, correction or crash happened so fast. And this is when it's really important to take advantage of these situations if you can. If you have money to invest, these are the times not to be afraid, but to buy great companies at great values. And that's what we did back at the beginning of April, and I'll go over that as well. But these are the stocks I'm looking to buy throughout the month of June, and let's get into it. So doing pretty good in the portfolio here between both of my Robinhood portfolios and my Charles Schwab portfolio. We've crossed the 200K mark in these in my retirement portfolio. My Robinhood is about 95.5, and my Schwab is just over 110 today. So sitting somewhere around 205. Pretty awesome. This is the year-to-date chart on Robinhood. It's up about 12.7% year-to-date. I think overall I'm somewhere around 10% between both portfolios. But obviously doing great, beating the market. Right now the NASDAQ is somewhere around 3% up on the year. But what stocks am I looking to buy in the month of June? And number one is ZETA. ZETA is a software company that is business management software. Smaller company. They have packages for small business, medium businesses, and large businesses here. A lot of cool stuff. But the main thing I like to look at here is how have they been doing, over the past few years. And coming here on macrotrends.net, we're seeing solid revenue growth, over time. Coming in 2019, we had just over 300 million. We had about a 20% increase into 2020 from about 370 million to almost 460 million in 2021 to just under 6 to 730, and now we are over $1 billion as of 2024. So steady revenue growth there and good double-digit revenue growth. Now, this company is not quite into profitability yet, but we're making moves there, okay? We are close to profitability, and if we come over here to the revenue and profit area and look at the net income chart, we have had, I think, a couple quarters where are we at here? We've had a couple quarters positive net income. So we are starting to transition. Not this past quarter, but the one before it was profitable. So this is what I like to see on a quarterly net income chart. If a company I'm investing is not completely into profitability yet, I like to see a steady path that shows how we're getting into profitability. Obviously, we had one profitable quarter. This past one was not, but we're getting there. So great numbers for ZETA. Now, since this is a smaller company, they're not profitable. Holdings like this, for me, I want to keep to 3 to 5% of my total portfolio because it's risky. But let's check out, there's been a couple other stocks that I've talked about on this channel that were also in the same boat. One of them being Okta, which I invested in, small position, and they've done extremely well, over the past few months. My position is up, over 21%, and I've been probably holding them for just 3 months or so. So that position's doing well. Also, we have GCT. GCT was one of those I talked about. I made a whole video a few months back. And GCT's done really well, up over 40% on this position. Obviously, another smaller position, but when it started to run, it ran quick. But they've been putting up great numbers. So looking at ZETA, we've so far a pretty good track record with these stocks. I'm not going to go into too much detail on ZETA, but I have started a small position in ZETA, just a few $100s. But ZETA for me is a buy under around $18 a share. And we're at right now a forward PE of somewhere around in the low 20s, and I'm pretty good on this with a forward PE up to 30 or so. I think that they've got long-term growth ahead of them, and I think we'll see a lot of success from them as their numbers have shown. So ZETA, check it out. Do the numbers yourself and see what you think. But for me, this is a great stock that I'll be building a small position in, as it is a little more risky, as they're not completely profitable yet. But I will be picking up more shares of ZETA in the month of June. Stock number 2 is SOFI Technologies, fintech company, banking industry. They're kind of disruptor in the banking sector. They're online. They've been really making waves lately. I've talked about SOFI before. I've been hesitant to jump into SOFI because there's been other stocks out there that, especially when we had that big dip in April, that I like to buy over SOFI, like Nvidia and a couple others. But right now, I'm buying SOFI. I just picked up a few shares this morning, actually. Very small position, only about $100 worth. But I will be looking to invest in SOFI, up to about $17 or $18 a share. I feel like it's a great buy under that, and I think it's going to do really well for the long term. Obviously, moving into some different stocks here, because the stocks that I was buying and heavily buying the last couple months, now they've kind of come up quite a bit. I think they're still in a good value range, but now that I'm up pretty well on all those positions in a short time, I'm looking to kind of expand into a couple of these other companies that I've kept on the side burner. And right now, SOFI is that. SOFI has tremendous revenue growth over the last 4 years. I mean, in 2020, we were at just over 750 million. We had about over a 30% gain into 2021, and then around a 70% gain into 2022. Obviously, from 1.7 or almost 1.8 billion to just under 3 billion into 2023, and then around a 20 to 30% growth in revenue into 2024. They've just come into profitability back in 2024, and their numbers have just been great. They've been doing a lot of investment growth within the company, and this is just kind of a time when I'm ready to start getting into SOFI. Obviously, they're in the banking area. Balance sheets aren't as good as other companies, product companies, but with this kind of growth and the fact that they're still just hitting it hard and heavy. And I like the prices we're sitting at right now. And I really think SOFI will be here for the long term. And this is really one that I don't really want to touch, for quite a few years. Obviously, over the next couple of years, if we hit, if we double, triple, 3x our money in this position, I might take some profits. But, as long as SOFI continues to grow, SOFI is going to be one of those companies that I really want to hold for many years, if not decades, because I think they've got so much to be done. I think they're truly the leaders in this industry right now. So, just a quick rundown on SOFI. I'm liking it. I will be picking up shares, like I said, around right now, roughly under $17, $18 a share. That's kind of what I'm looking for. But at the same time, if this is kind of one of those companies that if everything starts to get kind of elevated again and prices start getting a little high, I would still feel pretty competent, investing a lot more into SOFI, even at just fair prices, because I think they've just got so much work to do on the good side of things moving forward, so much growth. And stock number 2, SOFI Technologies. I know a lot of people are talking about SOFI out there, and it took me a little while, but I'm finally pulling the trigger on SOFI. And hopefully, I can build a decent position before it starts running too high to the upside. But if that happens, so be it. I'll take the small win on that. So quick update on some of the stocks I bought when we had that crash back in April. On April 7th, the S&P was down 20% from all-time highs. And I've been wanting to keep track of this for y'all, at least go over this monthly. But I was able to put about $4,600 between 3 stocks on that date. And so April 7th, NVIDIA was one I was buying. I got 17 shares at just over $88, and we're up. I mean, NVIDIA's at $142. So we've I mean, what's that, like 60% gain in 2 months, just because we bought at the right time when the stock market was going down. Now, we could have kept going down. That doesn't mean that every time we get down 20%, the stock market's automatically going to run to the upside. Actually, statistically, most of the time when we hit those numbers, we stay down for a good year or so. But my whole goal was really to just show y'all how to invest through a crash. And my plan was to keep track of all the stocks I bought when the S&P 500 was below the 20% from all-time highs. A lot of people during that time period get pretty scared, and they don't really want to be investing when we're in those dips in the market. But that's really where the money's made, guys. I mean, that's just where fortunes are built. I start putting extra money when the stock market's down that low. Like I said, I had about $4,600. Nothing too crazy, but a decent amount for most people like us. That I just went ahead, and it was extra money. I put it into the market. I always put 25% of my pre-tax income into stocks anytime I get a paycheck. But when the stock market drops over 20%, I'm putting all the extra money I have because I want to capitalize on that, because what the shares you can buy during those times for the long term will just have phenomenal returns. Obviously, we've already, that's $50-something a share just in 2 months on NVIDIA. So, I mean, it's pretty incredible, guys. Obviously, like I said, most of the time when that happens, it's going to be, a crash for a good, 6 months, possibly, a year and a half statistically. But those are just, you keep investing when you can during those dips. Don't not invest just because you're afraid. Those are the times to start buying, Mag 7 companies at great prices. These companies are Mag 7 companies for a reason, and during those crashes, they take some hard dips, and you can really make some great money on those as as the market comes back to all-time highs, as it has every single time, over the past 100 years. Adobe was also one I picked up just under 5 shares on April 7th. Let's see, show more on history. I think I picked up 4.65 shares at just under $340 a share. And of course, now Adobe is $417 a share. So, about $70, $80 a share increase there on those just under 5 shares. Great return on your money in, in two months. The other stock I bought was ELF on April 7th. And I was really liking ELF at the time. ELF has kind of gotten to a point now where I think there are other deals out there, but I still think they'll have great returns over the next few years. On April 7th, I had 30 shares at just over $50 a share. And today, ELF is sitting at over $117 a share. So fantastic return on ELF. That's well over a double up on those shares in just 2 months, guys. This is just, it's not to brag. It's just to show you that when the market takes these crashes and these dips and these corrections, it's the time to capitalize. That is the time to really get into investing. That's actually when it's the easiest to invest, even though it seems like it's the most difficult. Right now is kind of the hard part for me, because as the market, starts to come up and start pushing new all-time highs, obviously, it's great to see my portfolio hitting all new all-time highs as it has. And just this past week, cleared the 200K mark, which was a big milestone. But these companies that you're investing in during those crashes, you're seeing them just run up, 20, 30, 50%, ELF up over 100% from those lows. So it gets a little more difficult to pick up shares after you've already gotten such great deals on shares already. But anyways, guys, that's it for me today. Just a few stocks there that I'm looking to buy this month. Nothing crazy, really just ZETA and SOFI are the two I'm focusing on. I still like NVIDIA and a couple others, but as those have really profited over the past couple months, I'm looking to expand in a couple other stocks. And so that's all for me. If you like this video, please subscribe, hit the like button. I really appreciate it, and I'll catch you on the next video.